Hello everyone, in today's video we're going to be taking a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds. We're going to piece it all together, look at what is yet to come this week. We have obviously Tesla and Netflix earnings. We're going to put it all together and give a nice little breakdown of what is yet to come in the market. All right, so without further ado, let's get started with the video. Number one, first and foremost, the Russell 2000 is what we have to look at. So the Russell 2000 is very important right now because many banks were reporting earnings Friday morning. So they all opened up very, very well, right? So Citibank opened up, gapped up. JP Morgan gapped up. All of these banks did really, really well. So if we're looking at the XLF, which is the financial sector of the SPY, all of them basically gapped up and reversed completely towards the lows. Like a completely devastating, disgusting setup basically ended up happening. So these are all really, really ugly situations that basically happen. All right. So what is yet to come, right, is basically the IWM took a huge hit. Obviously, we were in puts for the IWM, and eventually they started to pay off, and they paid off well. Right. Now, the IWM and what just happened on Friday is relevant because we're going to continue reporting bank earnings. So Monday after hours, more banks, Bank of America, Charles Schwab, Morgan Stanley, Interactive Brokers, Goldman Sachs on Wednesday morning. So American Express, Capital One, various different economically sensitive financial stocks are reporting earnings this week as well. So what we already saw was that the IWM took a huge hit. So it's going to be relevant because if the IWM continues to get money sucked out of it, the money has to go somewhere, right? And what we saw was as the Russell was taking a huge hit on Friday, Thursday, basically as the Russell was taking a huge hit, the NASDAQ and the S&P 500 were skyrocketing, right? They were still holding support and they were still strong, right? So now this brings us to the next point. Tesla and Netflix are beginning to report earnings Wednesday after hours. So of course, Tuesday, especially Tuesday as we get closer to the close, things are going to start inflating in terms of options volatility. Things are going to get kind of crazy. All right. So it might be a bit of an interesting time to trade Tuesday. But if we're looking at the weekly news chart for the market, right, it seems pretty dry. It seems like this week is going to be pretty fun to trade, basically, because there's nothing really that's going on. First of all, there's no FOMC minutes. There's no Jerome Powell speaking. There's no huge economically sensitive data coming out during the market hours as well, so it's good. So the only thing is Monday at 8:30 a.m. we're gonna have Empire State Manufacturing Index news, and then Tuesday at 8:30 a.m. we're gonna get core retail sale news. So that's really it. And then Thursday, of course, obviously we always have the unemployment claims, but that stuff is going to be happening prior to the market open. So it's still a relatively very, very dry week. It should be fun to trade. And yeah. So now the $1 million question is, how much higher is the market going to go? Completely fair question. To get an answer, we basically need to monitor how the Russell and the NASDAQ do. We need to monitor the dollar, and then we also need to monitor the bonds. All right, so let's first go ahead and take a look at the dollar and the bonds. Okay, so now we see that the dollar is starting to finally find a bottom. We don't know how long this is going to sustain itself. I understand you guys are bullish. Okay, but finally got a bottom. All right, and we know that the dollar is relevant because the dollar has an inverse relationship to the market. So if the dollar starts to become bullish, then that means that the SPY and the overall market should begin to fall. All right, so as the dollar begins to bounce, then the overall market should begin to fall. Okay, so currently we're seeing that the dollar is clearly very, very overextended to the downside in terms of the Bollinger Bands, in terms of price, in terms of just sheer sell-off, right? So a bounce is possible. A bounce is possible on the dollar. if the bounce continues heading into Monday and Tuesday, and we bounce back to the $100 level, back to this level of resistance, the SPY should be red. All right, now how red? Time will tell, but this is currently a bullish. This is currently setting up for a bounce in the short term, okay, for the dollar. So if this continues, then the market is going to tumble, okay? Purely, very, very simple. All right, so there's that for the dollar. Nothing to overcomplicate here. And you could also see that the dollar is right here. This is the low. It's bouncing off of this very important zone of support here from the past as well in March and April of 2022. So it's bouncing off of this level here. So right below it is going to be the 99.3 level, 99.4. But this is a good start to where it should start to bounce. If it doesn't hold here, it's going to fall down to 99.3, 99.4. And but yeah, this is the beginning of a good solid foundation of a support where the dollar could potentially bounce. If that ends up happening, then the market, the overall market, should begin to fall. All right, very, very simple. Next, let's go ahead and take a look at the bonds. All right, so the bonds are important because they have a bit more correlated relationship to the market. We were calling for a bottom in the market a few days ago when the bonds were extremely overextended, and I knew that the bonds were going to bounce. And basically, when the bonds bounce like this over extreme overextension. So currently, this is the same setup that's basically happening on the dollar. But the bonds move correlated to the market. So if the bonds are doing well, then the overall market is also going to do well. This looks very similar to the dollar. And the bonds bounced like this, and it caused the overall market to also skyrocket. That's what we're currently seeing. But now this is interesting because now the bonds came to a major level of resistance and are starting to show some weakness. Very similarly in timing to when the dollar is also beginning to bounce. So that's something to take into consideration, guys. So the bonds are beginning to show a level of resistance here, and the dollar is at a level of support. They're both inversely correlated. If the bonds end up falling and the dollar ends up bouncing, then that means that the overall market should also begin to bounce or begin to fall. All right. So basically, that's it for the bonds. We need to see if basically this level of 125 can hold itself. This is a really, really important zone of support here on the bonds. If we get a pullback, this could continue up higher. But in the short term, right, the dollar looks like it should be bouncing. And the overall market, it looks very, very overextended. So there is the analysis so far for the dollar and the bonds. Let's go ahead and take a look at the equities, the SPY, the NASDAQ, and the large tech stocks in general. All right, so this is a chart of the S&P 500. Very clearly, moves that we have like this do not generally sustain themselves to the upside. But there have been two instances in the past decade where a move like this on the S&P discontinued. So there were two out of the dozens and dozens of times where that didn't happen. So we have to be open to that. But basically, given the fact that the dollar is beginning to bounce, which is a bearish sign for the market, and also given the fact that the bonds are beginning to hold a level of resistance, that's also a bearish situation for the market. The other most important thing is that the Russell, which was one of the main reasons why the market was bouncing like this, the Russell gave back all of its gains, and it started to show a lot of weakness clearly. Okay, so we basically almost filled this gap to the downside on the Russell, and this is not a really bullish setup. A lot of this push upward that we had in the Russell was in anticipation of the bank earnings. So prior to earnings happening, there's something called an earnings run up. So before earnings begins, right? Before earnings season begins, basically money starts to flow into that sector. So we saw the Russell was the main clear winner over the past few days in anticipation of these bank earnings. But what ended up happening? We gapped up, we moved all the way up here, right? We were showing a lot of strength. And then when the day of earnings began, we tumbled. Okay, so now earnings are going to continue for the next few days as well. So it's going to be, if it continues ending up, in the same situation as we did with Friday, then the Russell is going to continue falling lower. and then it'll help pull the SPY and everything down. But now the issue is that the NASDAQ is going to start having earnings soon as well. So the large tech stocks are going to start having earnings. They're starting with Tesla and Netflix. So once again, things are clearly very overextended. Repeatedly, you guys know what happened. You guys understand what's going on with the dollar and the bonds, all right? But now, basically, how is this level of support going to sustain itself? If it's going to sustain itself, for how long? And would it make more sense to get a bit of a pullback and then a continued rip up? That seems to be the most logical, most sustainable way of moving upwards. But regardless, we don't even need to have a pullback, technically, right? But there are many different reasons that are showing that we should. The dollar is starting to show strength. A lot of the questions are going to start being answered heading into Monday and Tuesday. But aside from that, you know, we're looking at all the data, we're putting it all together. Things on the equity side looking overextended to the upside. The Russell is starting to show weakness. The dollar is starting to show strength. The bonds are starting to show weakness. So there's like multiple different reasons that are leading to some weakness in the market. And that's basically what I'm looking at here. Now, Tuesday and Wednesday, the NASDAQ could start to show like a lot more strength because of Tesla and Netflix earnings. But aside from that, you know, if on Tuesday, Bank of America, Charles Schwab, Morgan Stanley report terrible earnings, Monday after hours, if these stocks report bad earnings as well, then things are not going to look good. Things are not really going to look good for the overall market. And I hope this gave you guys a good understanding of basically everything that's going on. And yeah, I hope you guys have a spectacular Sunday. I will see you guys bright and early tomorrow morning. Make sure you guys get a lot of rest and food. I will see you guys. Take care. Have a good one.